Hey, this is Jordan. This video is being recorded on the afternoon of Tuesday, October 24th, 2023. Thank you so much for joining me. In this video, I'm going to talk about the positive divergences for gold right now. But first, if you haven't already, please subscribe to the channel. I would really appreciate it. Thank you. Now, just one chart in this video. It's not going to be too long. We're looking at the divergences with respect to gold against foreign currencies, gold against the stock market. And I have done more than a handful of videos on the subject of these two being leading indicators for the gold price going back many, many years. I mean, you could look at the early 2000s, the mid 2000s, the financial crisis where both these charts made higher lows when gold broke below 850 and then it made that low at 700. So these are tested and true leading indicators. Now, no indicator is perfect, but these are pretty damn good. And the first thing I want to talk about is most recently, I mean, this is the positive divergence. You had a lower low in gold here, and then you had a higher low in gold against foreign currencies. And, aside from right here, this making a new low by like literally a hair, it was a hair below this right here. And I talked about it. I was looking at this, and then when I was using ETF data and not the real data of gold multiplied by the dollar divided by 100 to get this chart, that ETF data actually showed a lower low. So, with respect to gold and commodities, you really have to use the real thing. The ETFs are not necessarily a perfect proxy for that. But it's so anyway, when I was talking about the false breakdown here, it was not really the case. So I made an error in that respect. However, we see a higher low here, gold against foreign currencies. And again, this basically, aside from a hair lower here, I mean, basically didn't make a lower low. So this is what we're seeing here. And here, this is really a positive divergence because look, gold made a lower low here, was well below this low in these charts. So not the biggest positive divergence or leading indicator, but nevertheless significant. And, but I guess part of the reason why gold vaulted back to 2000, now it could correct and consolidate for a little while in a bullish fashion. But that's a good sign. Also, this is another good sign where you have higher highs here where gold has gone like that. So that's a positive divergence. Gold against the stock market has been weaker. The higher highs, that also worked out here. You had higher highs in both, actually. I mean, this first move at the end of 2018, remember when the stock market corrected 20%, higher high here, higher high gold against foreign currencies. This did not yet make a higher high. So that was a positive divergence. Now, there was a potential negative divergence here with respect to this here. This made lower lows. This also made lower lows, but gold did not. So that was a potential negative divergence, but did not pan out. But I will say, once we got to the tail end, December of 2018, the market corrected 20%. And the negative divergences didn't pan out. Then we had these positive bullish divergences here with the higher highs. So that was significant. So we have this right here. I mean, we don't have it yet at gold against the S&P, but so this rallied to 0.47. This here around 0.50 or 0.505. If you were to see a higher high or a new high, you see this breaking out. That's going to be fairly close, assuming it breaks out in the next 3, 4, 5 months. Fairly close to a 3-year high if we get the breakout. And I'll just tell you. If this goes above 0.501, you're looking at a new all-time high for gold. And maybe this just getting back to rallying back to the resistance would be enough for gold to make a new all-time high. So this is definitely, as always, something I'm watching very carefully as the days and weeks go by. Another example here, you had gold was making lower lows. This is a higher low, gold against foreign currencies. This, yes, you did have a bit of a breakdown here, but aside from that, nevertheless, you didn't really have a lower low. So positive divergences are really important in the gold market. And again, gold against the stock market, that is the best leading indicator for gold. I would probably put this second if we're just looking at ratios and gold charts. And, what this tells you is, looking at these, I think moving forward for gold to get the big breakout, over the next 2, 3, 4, 5 months, we need to see either the dollar have a big decline or the stock market move lower. When both those things happen, you're in a bull market that's going gangbusters for gold. But, here and now, I would say I think the stock market is more important. You get that weakness in the stock, you get more weakness in the stock market, you get this going like that. That's going to be enough to trigger the breakout, start of a new bull market. So that's it for this video. Good sign. Doesn't mean it's going to break out in the next month or two, but it is a good sign to see those positive divergences. Let me know what you think in the comments. Talk to you guys again in the next video.